Good afternoon, guys. How's everybody doing? Today is October 4th. It's about 4 p.m. or so Pacific time. Uh, the markets overall did fairly well today. The NASDAQ was up about 176 points, as you can see. I'm going to focus first on the NASDAQ and then go to the stock of the day. But if you look at it overall, I'm still not convinced the setup is right for NASDAQ so it broke through a key support area at the 13,158, 1688 timeframe, because that was a key support area that I had drawn. It broke down from there. It's trying to rally back up again, but today was an inside day candle, as they call it, a large red candle and a completely consumed green candle within it. So still not a good sign. I'm not convinced that this is actually going to go pick up back over here and go all the way up. More likely, this is a rally that is probably going to go to the downside. So what I would expect over the next few days is, either a chop and churn or maybe move towards somewhere like this, somewhere in that time frame. So just wanted to let you guys know. So today, one of the stocks that showed up on my radar that did very well was Palantir, a stock that is very well liked on FinTwit. So let's go through the 5-step process, see what we like, see what we don't like about Palantir. Let's start with the fundamentals, as we always do. Financials usually on a annualized basis are a good place to start just to get the trend. So the company, from an income statement revenue standpoint, did about almost 600 million in 2018, growing about 24% the next year to 700 million. A very good growth, nearly 50% from there, 2020 to 1 billion. Another 40% growth to 1.5 billion, and then it's slowing down. So you can see the big jump 2019, 2020, and then since then it's been slowing. It's nearly halved from 2020 to 2022, and the trailing 12 months is saying 2 billion. So that means this is less than 10% to 12% growth, something in that range. So that's not a good sign. We're not very excited about a company doing 10% growth, especially if the company is valued at $30 billion. For a revenue of 2 billion, that's 16 times. Yeah, I'm not very excited about this, but let's go through this anyway. Gross profit is about 1.5 billion. That's about 80% almost gross profit percentage. Operating income is negative. That's not a good sign. Let's look at it from a quarterly basis. Yeah, growth has slowed to the 12% range. So that's not a good sign. So it's been consistently slowing. So 34, 30, 25, 21, 17, 6, and then down to 12. Most likely going down even further. So not a good sign. Gross profit is about, as I said, 80%. Operating margin, operating income was not high. It's 10 million. So at least it's turning a profit. So going from a negative 50 million down to a positive 10 million, that's a good sign. And pre-tax income going from 123 million negative to 30 million, that's also a good sign. So it's actually turning a profit, and maybe that's at the expense of the growth. That may be one way to look at it. Quickly look at the balance sheet. They do have about 4 billion in assets, about 200 million, 250 million almost in debt. Unusual for a software company, but a lot of them seem to now raise debt money to be able to either buy back shares, or in some cases, because they got the money fairly cheap during the zero interest rate policy, they're just keeping the debt until they could. But if I look at it overall, even from a valuation perspective, there's no earnings significantly to speak of, so you can't really tell you that. Price to sales of 16 for a company going at 12. Yeah, I don't like this already. But since it's a tech stock that has got a lot of good following, let's go through the steps overall. Start with a high level. So it seemed like it had a very good, after the IPO, and a very strong move up. And then this was a stage. This essentially is a stage 2. A little bit of consolidation, stage 3, all the way until here. This you would call essentially a stage 3 distribution phase, and then all the way down to a downtrend. Little bit of consolidation here, stage 1. Stage 2, ramp up. Most likely this looks like so this ramp up all the way from here, 7.92 to here, 19, was a stage 2. And now this is usually a distribution phase. Usually that means stage 2, stage 3. This is stage 3. It's consolidating, chopping and churning, and the last 2 candles indicate that, on a monthly basis, this is just consolidating a little bit, either to go up higher or to go lower. We don't know which way it will go, but it's definitely on a consolidation phase, stage 1 or stage 2. So before we go ahead, let's just quickly draw some lines that might give us a little bit of a better sense. This might be a good point. So this is actually going that way, and then another one might be all the way from here. Okay, so that's what's happening with the stock. Some support and resistance lines to be able to draw. This is a good point, which is the $20, $19 kind of a range. If you remember, that's one of the ranges to look at. And then it has done quite a bit of support in the 1378 range. It took this, it touched it here once, touched it twice, touched it 3 times. So 13 might, so even if it goes down, you got to realize that maybe 1378 may be a point. It's about $15 right now, maybe 1 point of support that you want to look at from a monthly. Going to the weekly chart, well, I'm trying to look for patterns more than anything else, right? So this is, okay, so it went down, up, down, up, down, up. So this is a W pattern, as you can see it. So let me just draw that out to make it very clear. This is one, then it goes from here to, goes from here up back again, and then it's going back down again, and then back up again. W pattern, as you can see, should have done much better than what it did. So technically, if the stock was in a true uptrend, it should have just gone up from here, but that's okay. It took another little bit of a down to retest a number, and then has gone up back again. So this was a W pattern. So W pattern is the end. So this is a key point of resistance. This whole $19.98, $20 zone seems to be a resistance even on the weekly chart, maybe just about the $20 range. And this is support area because multiple times this 13.98 is touched it. So this actually, to me, looks like just consolidating within this on the weekly basis. If you could squint your eye, maybe I could draw a head and shoulders pattern, but that's a little bit of a stretch because it hasn't been proven yet. So this is the head. Let's draw. This is one of the shoulders on the left. This is the shoulder on the right, only if it moves down. So let's assume that it actually decides, the stock decides to actually go down from here, something like this, then that would confirm a head and shoulders pattern. Right now it's not confirmed, but it could be forming a head and shoulders pattern. We don't know yet. Going to the daily chart again, okay, now it's becoming a little bit more clear. So this one was a failed head and shoulders pattern, as you can see. So this could be another point of resistance just in the 1686 range. Keep that in mind because you want to look for even the short term. So 1677, 1688 once, a couple of times here, well, one more time here. So 16 to 17 range, 16.77 to 17.0 range is another area of resistance, and the support range actually could be multiple, again going from 1420 all the way to 1378. So what would it likely do, given that this is in a formation stage? I still don't know. It's definitely consolidating, so that doesn't give me any confidence that I'm actually going to buy this for the short term. Again, for the longer term, that's a different issue. If you have to believe in the company, look at the fundamentals. The fundamentals don't look good yet. I want to wait until the fundamentals get better.
Understand.
And then we will get from there. But otherwise, right now, I would just continue to hold and watch this stock. If I'm holding already, I'll hold it. If I'm watching, if I'm interested in buying, I'm not going to buy it right now yet. I'm going to wait for it to clear this zone, which is the 16 zone, to the upside. So 16.77, I wanted to clear this zone. Once it gets there, then you want to get it as close as possible to 1677 and see that's an uptrend. So let's assume that it does something like this. It just breaks out, goes like this, decides to go up here. That's one. And if it goes through the zone, then the next possible likelihood, this becomes a support area, the 1677, and then it could possibly go all the way to 1977, 1997 range. So that could be a move that would get me interested. So it's got to break through this resistance. Right now, I don't think it's going to do that. Right now, I think it's more than anything else, it's going to chop and churn around this area. And overall, the market itself is expecting chop and churn. So I'm going to assume that it's going to stick in this 1378 to 1677 zone for some time. Thank you very much for following, guys. Please follow, like, subscribe to the channel. Appreciate it very much.